Hey guys, Akil Stokes here. Welcome back to another Trading Edge video. If you guys are brand new, this is a video I do each and every week on YouTube showing you a preview of what's on my watch list for the week ahead in the markets. I hope you guys are enjoying your long weekend, and in celebration of that, I'm going to give you a longer video this weekend as I want to do something a little bit different. Instead of bouncing around the markets and showing you 2, 3, 4, 5, 6, 7, 8, 9, 10 trading opportunities, I want to focus on one. This is one of the best trading opportunities that we had this past week. And what I want to do with this video is kind of take you back in time a little bit. I'm going to start by showing you what I'm looking for. So the trading opportunity that is at hand, where you can look to enter, where you can look to exit, all of that fun stuff. But I also want to take a step back and share with you a recorded session from this Wednesday, I believe it was, our live trading room where we broke down the first chance at getting into this trade, right? So what I'm going to show you today is going to be a second chance entry. If you've been following me for any time now, you know that we tend to look at these trading opportunities well in advance, and we also have multiple opportunities to get involved where, hey, this is the first chance. If that doesn't work, then we go to plan B. If that doesn't work, we go to plan C and whatnot. So I want to take you in a time machine there, and I think it's going to be a very good opportunity for you guys that want to dig a little bit deeper into technical analysis, a little bit more of the advanced stuff to see what we looked at and how we were able to make a prediction that ended up being on the right side of the market. So let's start by looking at the trading opportunity that's at hand. But first and foremost, if you haven't done so already, hit that like button. It's the best way you can support this video. Again, I've been doing this for decades now. I feel old, and you know, we do it because it helps traders. This is something that helped me early on in my trading career, so I want to do the same for you guys. And if you're brand new, subscribe. That way you don't miss all the updates that I do on this channel. So we're going to be looking at the pound yen here on the daily. And again, you'll know a little bit more about the situation as we go back in the time machine, but we'll make things simple, right? We just broke and closed above a previous level of structure, right? We had a previous level of structure back here in late 2022. We retested that about a month or so ago, or early this month. I guess it is still May, earlier this month. And then we consolidated near the highs before breaking out. Now, this consolidation period right here is what we use, the clue, I guess you could say, we use to anticipate the bullish breakout. There's an inside bar there as well for you guys who've been diving into that. We'll talk a little bit more about what that clue is later. But now that we got our breakout, this allows us to reset our four-step process. And the four-step process that we use in all of our trades, right? This is what keeps us consistent. This is what keeps us organized, right? Consistent analysis plus consistent execution equals consistent results, is a process called IPDE, right? Identify, predict, decide, execute, where we want to identify what price is doing / what price has done. Based on what we identify, that allows us to make a directional prediction. Then we can decide if or how we can get involved in a trade, and then we execute the trade. So the fact that we broke out of this level and had a higher high, higher close, a violation to the upside, that allows us to predict a move higher. Now, this prediction process is layered, right? It's tiered. So we don't just want to predict the direction. That's the first step, obviously. But after we predict the direction, we want to predict, okay, if price action is likely to go in that direction, then where are we likely to go to? Because that's what's going to tell us if this is actually a trading opportunity or not. There'll be plenty of opportunities in the market where we can look at something and say, hey, price is going to go bearish, but it only goes bearish by like a little bit, and there's not a realistic opportunity of us getting into trade. So part of trading is we want to have the directional bias. We also want to have room to profit, because if there's no room to profit, there's no point in trading. So higher high, higher close allows us to predict that price is likely to go higher. If price is likely to go higher, then where are we likely to go higher to? Well, my mentor told me this. This is what they put in my bio under my trading view wizard thing, even though I didn't invent it, but I say it all the time. Look left, structure leaves clue. So we look left, the structure level that we were paying attention to was right back here, right? Now, how do we identify key levels of structure? A simple way, right? Understand the ebbs and flows of price action. This is something that a lot of traders pass over, they gloss over, they don't spend time to learn how to read price action. And because of that, they can't identify levels of structure. Because they can't identify levels of structure, they can't do this and that, right? Start with the basics, build that solid foundation, and then grow your trading from on top of that. So if we just look at the basic kind of ebbs and flows of the market, we can see kind of extensions and retracements, extensions and retracements. This was a previous outside return. So this is going to be a key level of structure. And I'm going to drag that line right here to the top of that, about 174.62. That's going to be a starting point. You can use zones as well, but we're going to keep it simple for today's video. But that's going to be a starting point of, hey, if price action is likely to go up, then I think it's going to go up to this level. And then we want to ask ourselves, is there room? We then want to look at a few other things here, right? We can bring in our tools, right? So a few tools that I use are going to be Fibonacci's, right? So I'll bring in Fibonacci's from a few different levels. We'll have to do this from multiple time frames, but we'll start with kind of the most recent swing right here. Fibonacci extension, swing low to swing high and back down, right? I can also take, there we go, an AB equals CD pattern, a one-to-one measured move, a harmonic move, right? Different terms out there for it. But I can take my A to B, B to C is going to be down here. I'll copy and paste the length of this A to B move, drag it onto our retracement right here, and you can see that an AB equals CD pattern is going to put me right above that level as well. A few other things I can do, right? Going back to the higher time frame move, this is going to zoom out a lot, but I can take a Fibonacci retracement from this entire move, swing high to swing low, because this whole thing is a retracement of this. You can see there's not much in there. I knew that already, but showing you the process of how we draw things out. And then finally, we go down to a lower time frame, a 4 hour. We'll have some lower levels to draw some fibs on as well. We'll actually go to the hourly here and look at this last swing. So we go to the hourly right here. We'll take a look at this last swing, and we'll say Fibonacci extension. Whoops, sorry, risk reward. Fibonacci extension, swing low to swing high, assuming this is going to be our pullback. If this doesn't end up being our pullback, we'll have to make some adjustments there too. So kind of roughly drew that on there, but you can see we got a few things lining up at that level. We have a 1618 Fibonacci extension. We have an AB equals CD. We have two 127s in the same area. So what we can do is we can draw out a zone from, let's say, I don't want to be above structure, so we'll leave that AB equals CD out of it. But from our structure level right here down to this first 127, because everything seems to fit inside that zone. So from a very minimum perspective, right, a conservative perspective, 174.15 would probably be the closest place you would shoot for targets if you're not adjusting to that 174 even handle. The largest place I would shoot for, again, is going to be about 174.62 with, again, a psychological number 174.50 being right in the middle of that. So again, there's no true place to place targets. It's all going to be based on you as a trader. I have a very particular way of doing it because I'm more conservative than aggressive. But if we have a trader that's more aggressive than conservative, they could be looking at a different location. The key is we want to identify zones, right? What is the zone, or where is the zone that price is likely to go to? And then we want to use our tools to kind of pinpoint where inside that zone we would need to shoot for targets at. And this does adjust all the way until the trade is actually placed. So we'll still have time to kind of figure this out. But at this point, I know that I have a starting point. I know I have a pretty good idea of where I want to place targets at. And more importantly, I know that, yes, there is enough opportunity for me to get involved in the trade so I can move to that D portion of my process, which is decide. So deciding how I want to get involved in the trade, I am personally a pullback trader. So I want to look for a pullback. I want to look for a retracement, right? We just broke a key level of structure right here. We're going to have an intermediate level of structure right here as well. You can see this nice little rejection candle. Boom, in there. Right? That's going to give me a few different levels to look for, right? So the first chance entry on this pullback would be price pulling back into this zone, right? I'm going to stretch this out a little bit actually because of the wicks up here and make this a legit kill zone, right? I hear my students yelling at me, well, kill, isn't a kill zone draw from the new structure high to the outside? Yes, sorry. So this is going to be the first area where we're looking for a retracement. Again, a minimum of 173.40s. maximum of 172.91s with a 173 even handle in there. That's where I would expect a retracement to come to. Then once we get inside that kill zone, look for my reason for entries, look for some clues in the market. So candlestick formations, candlestick combinations telling me that, hey, this is more likely to happen than not. And then we already measured out our targets looking for that extension back. And this is a classic pullback trade. So this is the second strike entry at getting involved in the trade. If you're someone that likes to watch this video for more than just trade ideas, you actually want to learn how to trade, check out the flashback video that I'm going to show you in a few seconds from our live trading room, because this is how we identified the actual breakout of this level and the first chance trading opportunity, which was actually right down here. So we'll go there in a second, but if you guys haven't done so already, make sure you check out the Trading Coach podcast. I did 5 new episodes this week, or 4 new episodes this week. They're available on your favorite podcasting app. We are going to go back, I think, to the 3 a day type of deal, just because I lost so many episodes when my external hard drive blew up. But I got a message from someone saying this today where he said, Akil, I love the podcast because I basically used them like an encyclopedia or a dictionary, where if I have a question about something trading related, I just search Trading Coach Podcast, enter subject, and then boom, more times than not, I get an answer for my question. So there are 800 plus episodes. Feel free to listen to all 800 in order, but use them as a reference guide for, hey, if I have a question about this, enter Akil Stokes Trading Coach Podcast, enter your subject and see what pops up. If nothing pops up, shoot me a DM and I can create an episode based on what you want to hear. Just got a question a few seconds ago asking about, do you have any advice on starting to develop a trading strategy? I've been dabbling here and there. Saw your videos, but I don't know where to start. So we're going to talk about that this week. So if you have questions, shoot it to me. All right, so let's hop back into a session from Wednesday's live trading room and show you the origin of this trading opportunity and some really cool hidden technical tricks that you probably wouldn't have thought about using before, but maybe something that you can now use in the future. What we can notice is this, right? Although price action hasn't violated this previous level of structure, this current level of structure, I should say, we also haven't retreated from it. So ask yourself this question, right? If the bears were super excited and super protective about this level, wouldn't we see something similar to what happened here? Where price action pushed up, bears got interested, and they pushed it down. This time we've come up and we've held. So although we haven't broken to the upside, although we don't have that clear trade plan based signal that says we're expecting a move to the upside, we can look at clues here and say that, hey, the fact that we're hovering near the highs tells me that, yeah, maybe the bulls ran out of steam. Maybe there's some pressure kind of pushing this down, but there's not enough pressure to create a pullback, or there's buying pressure keeping it up, or a combination of both, obviously. Like we don't know what it is. I don't know whether it's sellers not being strong enough. I don't know if it's buyers being strong. I don't know if it's a combination of both. Honestly, it doesn't matter. But the fact that we're hovering in this area gives us this clue. So the longer we do this, the longer I would anticipate a breakout to the upside. Because if the sellers are indeed trying to push us down, which they should be doing at resistance, and they're unable to do it, eventually they'll give up, right? How many times are you going to kind of kick on a door that doesn't open before you're like, whatever, this isn't worth it? So that's how I anticipate this in the market. And maybe that translates to what we're looking at with FTSE on the lower time frame. Now, higher perspective, I just want a reminder of where we're at here. This was the level we thought we can push to. I'm going to move this. I'll give you a different line here. Right? This is the level we thought we can push to, bigger picture. This is just basics of reading a price chart here for you guys that are new. So market comes down. This is our retracement. Boom, boom, boom. Fast forward back to real life. I hate that they put this there. There we go. You can see that there is room to the upside to go. Does that make sense, guys? So we do have room to the upside. And it's a lot bigger than what it seems because this is the pound yen. So we're looking at 174.69s, 174 even, right? Either way, we're at 172.30s right now. So there is room to the upside. So that's our top-down analysis. That's what we keep in the back of our brain. That's the identification part of the process for you guys that are new to the IPDE. And if I am going too fast, I know we have a lot of new traders in here. Slow me down. Understand I run this live room all the time, so it's and I've been trading for a very long time. So sometimes I get stuck with like, hey, we've got only veteran traders in here that know exactly what I'm talking about, and the newer ones get confused because I'm not explaining stuff. So if I ever am kind of going too fast or like saying IPDE this and that, like slow me down. Just be like, hey, Keel, what does that mean? What the hell are you talking about? I don't mind at all. It's always tough for me to kind of gauge who's in the room and what kind of level we're at. So going down to Fitzy's question, Fitzy was talking about, was it RSI? Fitzy says pound dollar 4 hour ranging. Here's our range, but RSI showing lower lows and lower highs. How can we interpret this? So we're looking at our price chart here, and we're looking at our RSI. And the RSI is ranging towards the downside. Our price chart, I would say, is actually slightly ranging towards the upside. So this is going to be our bearish divergence. Now, despite everything I just told you, Fitzy, this, looking at the RSI here, this would be a sign of a potential reversal. So very similar to, it's not the same, but very similar to how we look at like a rising channel with divergence on the RSI looking like that. So that would be a bearish sign. That's how I would interpret that. Which of course contradicts the holding of the highs here on the daily. But yeah, I would see this as a bearish sign. This would be bearish divergence. Yep, regular bearish divergence, unless yep. Now, what's interesting is this, and not to go too far down the rabbit hole, but you guys remember every year we go down this rabbit hole where I talk about a book that you should never ever read because it's going to corrupt your mind. And I told you the time that Jason read it and then he went and acquired all the books and burned them because they were witchcraft. He didn't actually do that, but that's how Jason read the book and then he like threw it away. He sent me a very sternly written message saying, Akil, don't ever send me no stuff like that again. But it's a very interesting book. It's one of my favorite books. It's called RSI: The Complete Guide by John Hayden. And there's not a lot of copies of it at all. Very hard to find. It is a book about the RSI that it gives a different perspective on how to look at it. And I read this book because the RSI is the main indicator that I use, right? The main indicator that I use is the RSI. And over the years, I decided like, hey, if I'm going to use this indicator, and I've been using it for my entire career, I would like to know everything I can about indicators, right? I think indicators are very interesting. I think we don't know nearly as much about indicators as we think we do. I would encourage anyone, whatever indicator you're using, to spend multiple times doing deep dives into those indicators. Because just like we spoke about earlier, remember earlier in the day I told you that most indicators are like meant and geared towards the stock market, and that doesn't necessarily translate to Forex? Well, in most cases, we're not using indicators to their potential. Whether it's sticking with the default value, which isn't the best value, or we're not even using it the right way. So let's take the RSI for example in here. What is the most common way that people use the RSI? This should be a no-brainer. Overbought and oversold, right? So when you first learn about the RSI, you've got it set to, what is the default, like 14 period. Overbought is 70, oversold is 30, right? We assume those are the best places for it. I'm forgetting. I'm having a brain fart right now as far as words, which is a normal thing. But we assume that's the best because that's what the default is, right? And we assume that, hey, when the RSI goes overbought, I should sell. And when the RSI goes over sold, I should buy, right? In fact, when I first got into trading, optimal settings, yeah, I thought the RSI stood for, right, the reversal strategy indicator. Because everyone was just talking about when it goes over this, you do the opposite. It means a reversal is coming, right? So most people come in thinking the RSI is just used for that. Well, what about divergences? What about hidden divergences? What about swaps? We got the pound rallying right now a little bit, smaller time frame, right? You know, you look at the MACD. Do we need the histogram? What about just above or below the zero line? I think we have Governor Bailey speaking. We're seeing some movement with the pound pairs right now. But the fact is, many of us are either using indicators the wrong way, not maximizing the settings for the indicator, and that's going to be different depending on your trading and your trading strategy, but also not looking at the other ways that we can use it. So, a very interesting thing about this book, and again, if you are a newer trader, I do not advise reading it. This is something you want to read later because it's going to contradict a lot of what you thought you knew, which is going to then get you confused because then you're not going to know what to follow. Well, this person says that person says this. But one thing that was mentioned in the book was the RSI zones, right? So I'm going to draw some zones here. There's different ways to do it. I'll keep it simple. We're going to do 67 and 33. Right? You could do 60 and 40 as well if you want to kind of make it more simple. But essentially it was this. If the market is between, and his whole principle is basically that, hey, we can read price. We can read price without a price chart. So I don't need to see anything up there. I can read price just by reading the RSI. So this is my price chart. And the idea was that as long as the market is between this 33 and above, I forgot if he had 80 or 70, I forgot what it was, but 33 and above, this would be your bullish trend, right? If the market was from here to here, this would be your bearish trend. And we would need a violation of one of those levels before going into the opposite trend. So if we're reading this bar by bar, right? Let's get a good thing to draw it out for you guys with. If we're reading this bar by bar, right? So we're in this bearish move, right? We go bearish here once we violate this line, right? We're bearish, we're bearish, we're bearish, we're bearish, right? As soon as we violate this level, that bearish trend is done and we're bullish, right? Because we broke above here and now we need to stay above here. So we're doing this, we're doing this, we're doing this. And again, this is kind of the dummy version of it, right? Did we ever go back into that bearish rotation, guys? Meaning, did we ever go back into this level? We have not. So this is nothing but a bullish flag pattern. And what do we expect from a bullish flag pattern? A bull breakout. Go back to our conversation earlier about hovering in the upper half, buying and selling pressure. RSI is telling you a sign for a bull breakout. Confluence. Right? So interesting ways. Splat. Right? Interesting ways you can use indicators in ways that you probably never thought you could before. Yeah, Fitzy, interesting, right? So we got bearish divergence here. We've got a potential bullish break on just from regular price action analysis. So the answer is I don't know. It all depends on how you want to read the market. I have a bullish bias because of the fact that we're hovering near the highs and we haven't broken to the downside yet. If we can violate this little shelf right here, see how we've had support, resistance, resistance, support, support, support. If we can violate the shelf, then I definitely think we'll push down to what, below 170.50s. But yeah, as long as we're holding here, I still think we can see that push to the upside. That's a very long answer to your question. Now, again, if you're someone that wants to position yourself beforehand, right? And again, you need a reason to do this. You just don't want to do it for no reason, right? We had the same situation as pound dollar here with the cipher. You also may get a higher high, higher close. So you may be able to put yourself here in a position like that where you accumulate your order, and then you've got yourself in a position for that potential breakout higher with low risk, relatively low risk. And of course, you can look for a double bottom or something of that sort as well. So different tactics to go there. But if you do want to get involved in it, see if there's a higher high, higher close here, or wait to see if you get a retest of structure. Or if you're involved in the cipher, hold on to a second part of your position, right? Target one should already be acquired for you if you're doing them traditionally and not maybe if you're not doing like the non-roll stop or having them at a different point. So you should have hit target ones already. If you didn't, maybe instead of doing target twos, you hold on for the bigger move, right? Target two should be at what, 172.20s for you right now. Maybe instead of taking them out at 172.20s, you say, hey, I'm going to roll the dice on this one and just move stops to break even. They should be at break even already, but I'm going to go for the big move. And this was, I'm talking about a cipher. I didn't draw it in. This was the cipher. Again, same exact situation as the pound dollar. They did the double. This was at like 171.60, somewhere around there, a little bit higher, 61 if I remember correctly. Yeah. So yeah, cool stuff. Hope you liked that. Hope it gave you some insight and hopefully it wasn't too confusing. It's a little bit advanced, but you can always come back to it in time when you get to that level, I should say. Also, if you ever want to join us in the live rooms, we host a London and a New York session 3 times a week, every Tuesday, Wednesday, and Thursday over on the platform. So just head over to www.tier1trading.com. You are able to join with your trial membership. So join that 14-day trial membership. Take some courses, talk to the community, download some software, and join some of the live sessions such as the live trading room where you can watch us do analysis, watch us look for trading opportunities, and even ask questions and get answers for anything that's on your radar or really anything else that's confusing you. So www.tier1trading.com, head over, sign up for that risk-free trial membership today. It's risk-free because there's no type of auto bill or anything like that. After 14 days are up, you're simply kicked out of the platform. Now, before you guys head out, do me a favor, hit that like button. Also, if you're not subscribed, make sure you do that. I do put out random videos throughout the week. So if you want to stay in the mix, you don't want to miss anything, make sure you're subscribed. That way, you know when they come. All right, have a great weekend.